Welcome guys, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, so in today's episode on the intraday day trading live trade experience series, we're going to be looking at how to not get on the wrong side of order flow. Okay, so the lecture is going to be a little bit short and straight to the point. Okay, so our Telegram group, always remember, is attached to the comments, the description box. Okay, so feel free to join the community. You are welcome to post your questions on whatever you are having difficulty with on the uh, channel. Okay, so now let's get down. Now we're going to be looking at this price action, right? We're going to be looking at the Euro USD on Friday's trade last week. Okay, so we're going to be looking at what I did on Friday's trade. So this price action, I want you to study the price action before you and do some annotations, because this is something we all come across once in a while in price action. Okay, so now with that said and done, let's go further. Okay, so now obviously we had a price action that look very bearish, right? Then we had a stop run on liquidity, a shift in market structure, a break in structure. Okay, sorry, this should be the break of structure and shift in market structure. Okay, so now what is actually going on right now is that we are having a price action that is looking bearish and bullish at the same time. Okay, so now looking at this price action from the perspective of using market structure, okay, you will notice that we had this high that broke this low, right? Then we have this old short-term high being taken out. Okay, then we had displacement, of course. Then at the same time, you will notice we had price trade into a previous fair value gap that has not been balanced. Okay, that has not been rebalanced. Okay, so now this is a premium institutional reference point and price should react off it. Okay, so now we have this imbalance right here. Okay, so this, when we come across this kind of price actions, it's sometimes it looks scary, because you most of the time you are going to be thinking, where is price going to go from here? Okay, what's the next draw on liquidity from this area? Because as you can see, price has reacted off this fair value gap. Okay, and you, at the same time, you can see we had another fair value gap that we are retracing back into. Okay, so what is the next line? What is the line of action to do when you are faced with this kind of price action? Okay, so what I did was that I knew we had a fair value gap above us, right, and we had a fair value gap below us as well. Okay, and market structure has just shifted to being bullish. Okay, so now this is obviously premium because we are trading above an old short-term high, which is a short-term premium. Okay, so what I basically did was to look for a short above here, in back down into this range. Okay, so let's look at how that looks like on the lower time frame. Okay, so we have the stop run, the run on liquidity, right, and we had a break of structure, and sorry, we had a break of structure and the shift in market structure on the higher time frame. This is that shift of market structure on the higher time frame. Okay, so we had this whole run on that higher time frame fair value gap. Okay, so now what I basically do, I was looking at this range. Okay, if I was thinking, if this price is continually is going to, it might likely come down and bounce off this fair value gap and continue expanding higher, or reacting off this fair value gap, it might likely just resume is underlying trend, which is the bearish trend. Okay, price might likely reach for this fair value gap, reacting of the reaction of this fair value gap might just see a continuation to the downside, and at the same time it might just react retrace back into this current dealing range and continue going up. So I was having two perspective in mind. Okay, I was having two perspective in mind. So the main aim of this video is how do you filter out such trade. Okay, how do you handle this kind of price actions. Okay, so this is what you are going to do when you are faced with this kind of price actions. Okay, so basically what you want to do is that the underlying trade you have to combine the concept of market structure and liquidity. Okay, so now first and foremost you have to identify your current market structure, your current bias. Okay, and obviously market is looking bullish because obviously we just shifted in structure to the upside, right? Then we had a fair value gap. Okay, then what you have to do is, since you are bullish, you have to look for an institutional reference point that price might likely draw down to continue higher, for a continuation higher. Okay, so the reference point I had on my higher time frame was this fair value gap. Okay, so this is a huge fair value gap, right? This is a huge fair value gap. So how do you handle this? How do you go about this? Okay, let's go down to the lower time frame and see. Okay, so this is on Friday's price actions. Okay, this is my 12 a.m. midnight. So I'm going to be using the concept of the 2022 model. Okay, so this is my midnight opening. All right, so now we had New York midnight open right there, the London Q zone and the New York Q zone. Okay, so now looking at the range, so I was looking at that 4-hour range. Okay, since there is a likelihood of price after reaching for this liquidity of resuming the underlying trade, which was bearish. If I'm looking at it from a liquidity based perspective. Okay, looking at this price action, so I'm approaching this price action from two perspectives. I'm approaching it from the perspective of looking at liquidity, and I'm approaching it from the perspective of looking at market structure. Okay, so liquidity is always going to come first before market structure. Okay, so I was making like, okay, now we had this run on an area of liquidity, an area of institutional reference point. Okay, so price is going to probably retrace. So what am I going to do? Let me position myself in a sell back into the discount side, because this is looking at the range. Obviously we are still in premium. Okay, so I look for a shorting opportunity. So I was looking for a shorting opportunity down into the discount side, into the discount spectrum. Okay, so that was what I was looking for. So that is basically how you handle this kind of price action. Okay, so if you are faced with a price action that looks like this, okay, you have a institutional reference point above you, the market seems bullish, and at the same time it looks like it's going to resume the underlying trade. What you have to do, that the current trading range you are in, you have to you know you have to look for an institutional reference point within that dealing range. Okay, within this dealing range. So my dealing range was from this low to this high, so I was looking at this whole dealing range. Okay, I could have you can use this most recent swing low as well, because this was a short-term low that broke this high. Okay, so you can use this or you can use this. So in this example I made use of the of the extreme end low. Okay, I made use of the extreme end low. So I was looking at the whole price swing as a single price swing leg. Okay, so that was basically what I was doing. So let's continue. Okay, so you can see I measured from the low to the high. Okay, so now price is still premium, it's still at the premium, it's still at premium. Okay, so what do we do at premium? We sell at premium, buy at discount, right? So now let's go down further and look at how. So we have our midnight opening price, right? Then I was looking, remember I'm looking for a short, so I'm looking for a short-term premium. In other words, I'm looking for a run above a short-term high. So I was waiting during the London session. We had this run above this short-term high. Okay, and at the same time above the opening price. Okay, so now I was anticipating a shift in market structure. This is the 15-minute chart time frame. Okay, so as you can see, we had that shift in market structure to the downside. Price created the fair value gap right here. Okay, so as soon as we started retracing into the fair value gap, I went down to my lower time frame for an entry. Okay, so now as you can see, this is the 15-minute fair value gap. Okay, so price refilled it completely. Okay, so we had this break of structure to the upside. And we created a higher high, which is obviously a run on liquidity. As you can see, the market broke down, shifted the structure to the downside. This was a huge displacement, right? Then when it started retracing, I pulled out my fib, which is what we are going to see on the next chart. Okay, obviously I pulled out my fib and I got my entry right there. Okay, so I got in right there on that. So my target obviously was this low. Okay, this was my first initial target, and remember, we are still above premium. Okay, so I got my entry around this. As you can see, this is where we had the shift in market structure, right? And price, although it traded into discount a bit, you can see price retraced back into the fair value gap. Okay, price retraced back into the fair value gap, and I got my entry around this area. Okay, so now my target obviously was this fair value gap below uh below the discount. Okay, so I got out right here on this fair value gap at the mean threshold. Okay, at the mean threshold I measured this fair value gap with my fib. Okay, I measured the overall range between the lower part of the fair value gap and the higher part of the fair value gap uh with my fib. Okay, Fibonacci this thing 2. Then I took out the mean threshold, so that was where I got my exit, and it gave me about a risk reward ratio of 3 to 1. Okay, so that's basically all I did for this trade. So the takeaway of this lesson is that when we are faced with this kind of price action, okay, the best line of action is to look at your current dealing range. Okay, then look if there is an institutional reference point within that current dealing range that you are currently trading at. Okay, price obviously reached for this premium. Okay, for this premium uh institutional reference point. Okay, so now price might likely do one of two things, right? It might likely trade back down into this range and continue going up, or it might likely resume the underlying downtrend. Okay, because price is drawn to one or two things: imbalance or liquidity. Okay, so obviously if there had been no imbalance in here, there would have been no trade for me. Okay, there would have been no trade. I would have just moved to the sidelines. Okay, so when I saw this imbalance, I was expecting this to get filled. Okay, I was expecting this to get filled, and when I got my sell above in the premium side, I got at discount. Okay, so I moved to the sideline, obviously. Okay, so I was not interested in the other what happened next during the rest of the day, because I was watching to see where price is likely going to trade to before I so that I can get probably look for another entry. Okay, if price had continued trading, expanding higher, then I would have come back and look for an entry to join the underlying trade up. So obviously the new week that we are going to, which is this week, is probably going to tell us where this market is going to trade head to. Okay, is it going up or is it coming down? We are going to find out in the new week. Okay, so now before we call it off, someone posted this on the community on Telegram. Okay, so it was asking a question, and I addressed the question, but I felt I should add it to this video. Okay, so basically the question was, if we have a price action. Okay, so we are using a graphic illustration. Okay, so we have a price action that was obviously we have a price action that's bearish. Okay, so now price traded down from some sort of resistance level. Okay, so now trade down, retraced, and we had a fair value gap on this price leg. Okay, we had a fair value gap on this price leg, then it broke down without rebalancing this fair value gap. Okay, without rebalancing this fair value gap, then price broke structure to the downside. Okay, then started retracing, and at the same time breaking structure to the downside, it creates another fair value gap, which is obviously on this second leg. Okay, so on the first time we just having price trying to reach for this fair value gap, but it failed to reach for the fair value gap and it broke down. Okay, then started retracing higher, creating two institutional reference points. So we have a fair value gap on this price leg down and another fair value gap on the higher price leg. Okay, so what's the best line of approach to this kind of price action? Okay, so now what I was trying to explain to him was that it's similar to what we have just looked at. Okay, so when we are faced with this kind of price action, the best line of action of what you should do, yeah, to approach this kind of markets from um, both perspective of, okay, from two perspective, from the liquidity perspective and the market structure perspective. Okay, so obviously we had already seen a break of structure, so this old short-term high should be protected. Okay, should be protected, right? Like if price decides to trade above this old short-term high, using the concept of market structure, that will be viewed as a shift in market structure. Okay, that will be viewed as a shift in market structure, and the probability for, in other words, the probability for this underlying trade to continue is very low. Okay, so a reversal is in cases when we have this the short-term high in this example that takes out a short-term low, okay, as a continuation to the downside, that broke structure to the downside in a down one trade. Okay, when we see that short-term high being violated, that indicates a shift in market structure. Okay, so and at the same time, this can just be, a run above this old high and to refill this imbalance. Okay, so what price is likely going to do, it might likely reach for this imbalance and continue going down, or it might likely reach above this, and this will be viewed as an internal range liquidity be be, between this high and this low, right? And it will likely refill this imbalance and continue. So what do you do? How do you approach this kind of price action? Okay, when we are faced with this kind of price action, what you should do is the best thing is to view it from two perspectives. Like I said, you have to view the market from a the concept of market structure and the concept of liquidity. Okay, so now, just like I made mention in the teachings just now, okay, the idea is to look into your current dealing range. Okay, so this is your current dealing range, right? So now what you do, you take out your fib, okay, and you measure from the high to the low. Then the fair value gap, is it, you have to look if the fair value gap is in the premium side, right? If the fair value gap is resting above the midpoint, then it is valid. Okay, then wait for price to reach for that on the higher time frame. Once price reach for that on the higher time frame, or any of the time frame you are currently viewing the price action from, okay, then you go down to your lower time frame to see if there is a shift in market structure. Okay, so now once you get that shift in market structure and you are able to get an entry, your best exit is going to be right below the midpoint. Okay, it's going to be at discount, because in your best entry is going to be at discount. You might likely take off maybe 50% of your position, then trade your stop loss to a break even, because this could just be, this is, as we know, is like I already said, this could just be a potential stop hunt. Every break of structure is a potential stop hunt until we see another break of structure. Okay, so in other words, price could just literally trade down and and take out this old high as a stop, as a run on liquidity. Okay, so every price break that we see, every break of structure that we see, are potential stop run or run on liquidity until we see another break of structure to the downside. Okay, so now the best line of action is to be sure that the fair value gap you are looking at is in your point of interest. In other words, it is in the premium side. Okay, measuring this current dealing range. Okay, once your fair value gap is above the midpoint, you go to your lower time frame. Once price approaches the fair value gap, okay, you go to your lower time frame, then you anticipate your edge, you look for an entry. Once you get an entry, then measuring this range, okay, take your fib, you look for a point of interest below the midpoint. Okay, so you can totally close the trade, or you can take some major positions off. Okay, you can take some major positions off, then trail your stop loss, to a break even. Then once this old low gets taken out, and if you have another opportunity, if you see another opportunity to get in And once this low is taken out, you can then, if you have another entry to, another point of interest to get in, you can then add the positions that you took out from here. Okay, the partials that you took out, you can add them back in on the continuation lower. Okay, because why am I saying you should get out, or you should exit the trade at the discount? Because this could just be, a reach into the premium. This could just be a retracement and a continuation to the upside, and probably you might then be in the way of order flow. Okay, you will then automatically be on the wrong side of order flow. Okay, so by doing this, by getting in at premium, then taking out your partials and moving your stop loss to break even, the market, if the market decides to reach for this above this higher fair value gap, you will eventually get stopped at a break even after taking out partials. Then you can look for new entries at this fair value gap, at this higher fair value gap, to even go down further. Okay, or you can, obviously, if you have this break of structure, just like you see on this example we had, is almost like the same kind of scenario. Okay, it's like a similar scenario. Okay, so we had a high, a low, a higher high. Okay, I think it's even the same. Okay, I think the price action are kind of similar. We had a high, a low, a higher high. We had a fair value gap that was failed to reach for. Then we had a lower low. But what happened was that we didn't have another fair value gap that was on this second price leg. Okay, but we had a fair value gap above marketplace. Okay, so this is just basically what I was saying. So that this would be that price leg. Okay, this would be that price leg that would have reached for this second fair value gap and continue going down. Okay, so basically that is the best line of, or rather the best line of action. Okay, so I guess that will be all for this teaching. Okay, I don't, during the time of making the presentation, some slide actually got deleted. Okay, I think that was why we didn't have, I didn't we don't have my we didn't have my executions and targets in it. Okay, but I'm showing you the levels I got in right on this candle. Okay, my stop loss was above this candle because we had another higher fair value gap, so I gave a breathing room for price to likely reach for it. Okay, so my target was this low, and for partials was this low. Took out my first partials, then I aimed for this fair value gap right there. Okay, the mean threshold of this fair value gap, that was where I exited the trade. Okay, so now you guys can see the benefit of joining the Telegram group. Okay, so if you join the Telegram group, you have the opportunity to ask me any questions, whatever you're having difficulty with, and I will attend to it shortly and briefly. Okay, so that is all for this lesson. The next episode, on which is where we stopped on the advanced trading model, we are going to resume very soon, and working on it. I've been working on it all night. Probably the app is going to come up tomorrow, and I'm planning on doing a weekly outlook. Okay, I'm planning on starting the weekly outlook series, which I've been talking about for a while now. Okay, I'm actually looking at how we are going to put that into action. Okay, so thank you guys for joining us, and please, if you have not subscribed to this channel, please do well to subscribe so you don't miss out on all the wonderful content we have planned up, and the previous one in this channel that you haven't watched. Please do well to check them out. Okay, check all the previous videos out. Okay, so thank you guys for joining us today, and do have a great weekend, a great trading week ahead. Okay.